Hey everyone, welcome to Breakout Wednesday for the 17th of August 2022. It's currently about 2:30 p.m. on the West Coast, 4:30 p.m. on the East Coast. First of all, remember this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Okay, I've missed 3 weeks in a row. Been in New Zealand enjoying life. I'm back, and I don't think I'll be going away again until about Chrissy. So I should be here every week, back at work regularly. Now, the market, in the last episode 4 weeks ago, I was talking about, a bunch of setups and high, low setups, and I'm wanting to be in at least a few of them in case the market kept rallying. And that's kind of definitely played out. Doesn't mean all those stocks I planted myself in went up, because some of them didn't. And I'll go through that super quickly in a sec before I move on to some setups and some other stuff. But, it certainly played out well as for those who know how to manage risk and risk reward and really kind of let in the winners run and cut in the losers. And I'm going to go into that in a bit more detail, what that really means in the real world. And so just really quickly, some trades that I was been talking about. ADC, it's still going and I'm still hanging in it. The best one I had was DRE, and I've still got a third of him left. And for those who missed the talk 4 weeks ago and are interested in learning about this setup, simply go back and listen to my last talk, okay? But this is just it came up in a plain old Davis box scan. It's stock that had this formation day of this base on big volume, and then the volume dried up at well below the 60-day moving average in volume and went sideways and then just breaks up. I mean, the pattern is not rocket science, okay? It's all sitting on top of the moving averages. This is just this pattern that happens time and time again. For over 20 years, I've been just watching these same patterns unfold, okay? And so that's been my best trade lately, and it doesn't matter that I've had a few losses, because I've let this one run enough that I've made a killing from it compared to some of the tiny losses I've taken on some of the trades that did not work out, and I'll go into that a bit more, right? And that's what trading's all about, okay? So AX1, okay, it was a trade that didn't work out, and it broke up here and then it broke back down. And so my stop, as I've talked about a lot, is usually the day of the break. Okay, I'm usually one of these guys that has tight stops, and I'm going to talk about a bit more in a sec because someone asked a question. I'm going to go through that in a sec. But and so I was stopped out when it broke back below this candle here and for a small loss. Okay, you do the math on tiny losses and big wins, and you don't need to be a genius to figure out that is the correct formula to make good money and have a profitable business, okay? Let's just move on quickly some of the other setups that I was talking about. Air New Zealand had a nice break. I'm hanging in it at the moment. AMD is one of these things that I'm hoping is going to be the trade of my year. I'm holding the full lot on it. Okay, this is the one that I got in back here, and I'm sitting tight. I'm going to follow that up later. Try not to look at it at all. Amazon, okay, broke up above these highs, gapped up, and and it's going on with it. Never let anyone tell you can't make money on expensive stocks. Norwest Energy was a loser. Faked out, had a huge number of shares up here in the order book, and I was looking at it. Probably should have pulled my order, but I didn't. I managed to get out of one of these days when it wicked up a bit and I could scale out. So I took a pretty small loss on NWE. That's okay. And just quickly, to show that this is a frustrating game for everyone. Doesn't matter how hard you work and how long you've been doing it. But this was a stock I talked about a lot, and I was so keen on it, and I entered and I got chopped out, and then boom, okay. Did I manage it wrong? No. Should I have got back in? Totally, and I didn't. But just because a setup's great, you can still butch it, and I still butch things all the time, but that's life. I just move on and accept that I'm going to do that every now and then. Now, a question came through someone wanting to know where are my stops, like where's my initial stop go. I have talked about this a lot, but I understand that people coming and going, so let's just quickly do it. So it depends what market we're in. Okay, and the question specifically was, when something breaks out and then comes straight back down, what do you do? Do you get out of break even? Do you have a little stop so that you're risking and still going to maybe have a small loss, or do you have a wide stop or whatever? I tend to always, typically, when I love to set up, have a stop below the day of the breakout. It's a few ticks below it. There are some exceptions where I have wider stops, but I won't talk about that now. And then, by far and wide, 99% of my money is made on stocks that never look back. They just go like this and boom, and they're just off to the races, okay? And I like the tight stops, because AX1, traditionally speaking, if you had a stop down here, you would have got stopped out still. And, a lot of the kind of research and back testing I did was that the ones that poke up and then aggressively just bang back down, they're probably going to go down and shake out all these traditional stops here, right? Just like it has here. It's just gone down and kind of faked out and just done what's called a stop run. I much prefer to have my stops tighter and just lose a little bit of money instead of losing a bigger chunk. It also, in a great market, means I can trade aggressively and have a much bigger position and risk the same amount as if, I would with a smaller position and a wider stop, if that makes sense, okay? Now, if a stock, for example, one sec. Sorry guys, just trying to find an example that kind of is easier for people to kind of follow along. So let's just say I had a stock that broke out. So I'm just going to call, Sorry guys, just murdered that a little bit. So let's say something breaks out, and let's just go to the Amazon trade, because it's just one that is in my head at the moment. And so here's the breakout level, right? It breaks out, and I learn a lot from a guy called Mark Minervini, who a lot of you will know. And if it breaks out and then comes back, the first time it comes back, I hold my initial stop. Okay, I'm just firm on that initial stop, right? So I think with Amazon, I actually had it a bit further down, whatever. It was about there, I think. And that first time, I just hold my breath and just see what happens, okay? And then it goes up and I don't get stopped out. Now, if this came back in the second time, that's when I would never let that winning trade turn into a loser. So, because people say never let a winning trade turn into a loser, but what does that mean? Because at this moment here, this is a winning trade, and then I'm still willing to let that turn into a loser. There's got to be a bit of leeway, otherwise you're just going to choke yourself out. But when, okay, so you need to be willing to accept a small loss, right? But when that then doesn't stop me out and goes on with it, then that's when I will move my stop up, okay? And it's a pretty classic way. If you go and study Minervini, it's exactly how he does it. Okay, and then after that, it's a matter of trying to figure out how to sell into strength, or at least trim into strength, okay, to protect my profits, okay. I hope that helped that person out with his initial stop loss placing. Remember, this is not financial advice. Now, let's just get on with some setups, because there are a few that I'm watching, and it is we've had this lockout rally in so many stocks. Like Apple's been going straight up. I mean, look at that. And a lot of Australia's kind of lithium stocks, and there's a bunch of others, but a lot of our lithiums, PLS6, for example, have been going up. And so it seems now, like with the market, it's not, it doesn't feel as right as it felt a month ago to be piling into new setups, but I will still take the really good ones that come along, okay? And so what are some good ones out there, I think, that are forming? TON, Triton Minerals, okay, and I like it because we had massive volume here, a huge range bar, and then just a much, much smaller volume during the base and sideways movement, okay? Now, this is a penny dreadful, okay, and so it's still a gamble, like a complete gamble as far as I'm concerned. But if I'm going to gamble on penny dreadfuls, it's going to be on, there needs to be some edge in the setup and stuff, and there is some edge there. So TON I'm watching. IRE still hasn't broken out, and it just keeps forming this massive base. Okay, and so that's weekly data. This is daily data. Okay, we had this big gap down and a big wick and rejection. It's just putting in this huge low down here, and then that hasn't really been tested. Complete rejection of these prices with this wick, and so I'm just watching this massive base play out. If it can, continue doing this and then break up, then that can be, a breakout of a major base. So IRE I'm watching. Now APM is a new IPO. Okay, like this stock IPO'd, I believe, in November 2021. So 12th November. And it did what most IPOs do and went down, and then it's been just crunching sideways and churning away, but now it's got 3 tests up here and a really nice IPO base with complete blue sky above it, and if there was if I'm going to poke a hole, it's obviously this volume. Okay, dumping volume, and this day here, which is a doji, so it doesn't really mean as much, but the volume's not ideal. But I would be arguing that the on-balance volume indicator has some major flaws, okay, and that who's to say that, yes, the sellers are in control on this day, but that doesn't mean the buyers that were buying on this day weren't completely switched on and know exactly what they were buying and exactly what they were doing, okay? And so I take it with a massive grain of salt. As far as I'm concerned, we have an IPO base with blue sky above it, and a massively awesome risk reward on APM. Okay, RCE is little pharmaceutical company, risky as hell, these things, and I don't like this as much as APM, but we're having a nice move up, and I like the volume. So this came to my attention on a volume spike scan, and it's been basing since then. Okay, if you put all the key moving averages, it's just sitting right on its 200-day, and a break above that will be, leaving all those moving averages behind. I'd love it if it could base longer, get another week or so there. But APM is coming up in DAVA scans, volume scans, and RCE. Yep. And then one other little tiddler, TAR, and it did not break today, which I thought it might, and it didn't. That's good. And we have like this, obviously, mineral stock that members trading this back here and got lucky here. But anyway, it's this stock can go berserk. It's been going crunching down for a long time, but it's got a base bottoming pattern here, decent volume, and it's risky. Okay, I bought up 2 penny dreadfuls today, which I don't usually do, but they are the best setups in my opinion out there. The other thing I just wanted to touch on is something I've been doing lately. I've been doing it for a long time, but I probably have never talked about. And often you'll hear people say you can't really trade ETFs, you only invest in them. And a lot of people have probably realized that when I put the ETF charts up on the screen, that I've kind of often got lines on them, and just like I would a normal stock. And I would argue heavily that trading ETFs, it might not be as bang for your buck as the DREs of the world. And obviously, we all like catching movers and winners like that, right? But if it's kind of a safety aspect to the portfolio where you think the market's going a certain way, and you want to try and sidestep a lot of this kind of earnings reports like happened in CGF, and every stock for that matter happens, then ETFs, there's a huge role to play in ETFs because patterns work on them just like they do on stocks, and you're pretty much just trading an indice. You don't need leverage if you just trade an ETF. We're not talking about trading index futures and stuff. We're not, this is not a chart of the SPY right in front of us. It's the NASDAQ ETF. And you can do the same with gear. And, I reckon for those who are struggling a little bit to make consistent money, just spend some time looking at charts of ETFs and just analyzing how they move, okay, and just what they do when they break key zones, because they can give some incredibly reliable signals, and you don't need to worry about overnight gaps. Obviously, if the Dow's down 12%, it's going to get hammered, but you don't have to worry about earnings gaps and the like, okay? That's it. I promise I'll be back next week. Take care. Cheers. Bye.